Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in today's video I want to talk about a new stock I added to the portfolio. Also one I actually trimmed. We also need to talk about RTK. We need to talk about Adobe. So we have a lot to get into, so let's get started. First thing I would like you to do is just press that like button because it really genuinely helps the channel. It doesn't cost you a penny. And of course you can join us in the Patreon account where you get access to all of these things, including the Discord. If you can do that, that will be absolutely wonderful. Right, so first thing we're going to talk about is the fear and greed index. Right now, as you can see, we're still on greed. A lot of people are now very greedy still. You know, everything else is going to the moon and so on, but I do feel like we're coming, basically a couple of weeks ago we were here, now it's coming back down. So sooner or later I think we're going to end up neutral sooner or later. And I got a feeling when it comes to technology we're going to basically start feeling the pressure, especially technology companies start feeling the pressure, because some people might start worrying about, you know, similar thing happening to like what happened basically in 2022. Was 2021 was great for technology companies. 2022, everyone hated technology companies. Everyone was selling technology companies, and we had a shift from that to oil companies. So in 2022, we had a shift from technology to oil companies, mainly basically the energy companies there, and some of the pharmaceutical companies were doing okay. Everybody else was kind of suffering, especially technology. Now we can see that again because right now the way things are going. So if you look at for the 1 week, okay, as you can see here, there's a few companies, especially the big boys that have been actually going up every day, has now lost quite a bit. So I feel like we're seeing another rotation from technology to maybe oil, to maybe healthcare, to maybe other sectors. And that's only good for us, because then that gives us an opportunity to buy some of these quality businesses, hopefully a fair value, if not discounted. So it's a great thing for us. So I'll share with you guys in a second one of the technology companies that I've actually sold, and I added something else, which I will share with you guys in a second. Now RB has now got some issues. Okay, so basically jury has ordered RB to pay 60 million for in baby formula case. Now this is one case, okay, 600 million in baby formula case. As far as I'm concerned, is one case. However, there are apparently this is the first of hundreds of cases that have been filed against basically the company. So this company, Mead Johnson, is basically owned by RB. So they are owned by the company. And also Apple also sells similar sort of a product. So they are slightly a bit worried. I think they're down about 3-4% today as well. So RB is now down, I think, over 10% or whatever it was this morning. So I can show you exactly. Did I say 10%? 14% was down, I think, when the market closed. So what am I doing? I'm actually buying more of this company right now. Of course, we still, you know, it's still early days. No one knows exactly what is going to happen. This has given me an opportunity. So I bought 5 shares of this company today, and I'm going to continue buying it while it's still down. I want to get to basically 100 shares. It's one of those things. I don't like it. I don't like it at all, because it's very similar to what J&J and 3M were going through, still going through. But I want to see what happens. Okay, so it's still early days. This is just basically news that just came out. In the next basically couple of months, 3 months, 5 months, these things take up years sometimes. The stock can easily recover. So I want to hold on to it, inshallah. The dividend is good. The company is, so in terms of business-wise, is solid. Of course, they had reported the earnings recently, which was not great. But earnings I don't mind, because that can recover. I'm not holding these companies for the next month or month after. I want to hold these companies for at least another 5 to 10 years. So I want to see what happens. I'm not going to rush. I'm not going to jump to conclusions and sell it straight away. I'm going to wait. It's down right now about £1,000, which is absolutely fine. Okay, I'm not really too concerned about that. I'm going to keep dollar cost averaging every single month. Right now my average is £57 and 60 pence. So I'm going to keep buying more of that, inshallah, until I get to 100 shares, and I'm going to leave it. And if things continue going down, I'll keep buying more, and then I'll assess the situation, and then if I'm ready to sell it, I'll sell it, and I'll let you know, of course, as always. But this is the problem with buying consumer staples companies, because when one case comes up, everybody else then jumps on the bandwagon. So right now, the fact that there's hundreds of cases is a little bit concerning, but these companies do have a lot of money, and they can easily sort these things out. So I want to see what happens first before I jump into conclusion. Next news thing we're going to talk about today is Adobe. Adobe is down. I think it's down. Let's go back here for the today. How much is it down? 14% right now. So it's down 14%. $489 per share is where it's at now. So why is it down so that much? Okay, let me quickly show you in terms of, then you'll be surprised. Okay, so digital media. So this is this different segment within their business. So digital media, quarter to quarters was up almost 3%. Year on year was about 12%. Digital experience, okay, 1.8 for the quarter to quarter, and then basically for year to year is almost at 10%. So nothing to worry about. Things are heading the right direction, right? Then here, the next part is the cloud creative, okay, 2.4 change in terms of quarter to quarter, and year to year is about 11%. Document cloud, again 4%. 18%. So nothing absolutely huge to worry about when it comes to this business. And then when it comes to different geographical kind of areas, it's also heading the right direction. So they have not spoken about. So this is the main thing that this company has basically is down right now because of the AI concerns. And again, remember the company has a Firefly, which is basically their version of where you can actually, it's basically generative AI. And that's doing fine. There's no issues with that. They probably were expecting more from this. And the other thing that this company is down a lot today is because people are worried. Wall Street is actually worried about the fact that OpenAI's new video basically software, or AI, basically generative AI, is potentially dangerous to basically the revenue for this company. Although the CEO came out and said, you know what, let them create their videos, and then sooner or later they're going to have to edit it using Adobe software, blah, blah, blah. So the expectations from AI is not what they wanted. And for that reason, the stock is down quite a bit. The other thing that company has actually done is they also announced, I think they announced, was it $40 or $25 billion, I think, of revenue. They're buying back their own shares. $25 billion buyback. There you go. So they're buying back their own shares. Revenue is going up. Absolutely no issues as far as I'm concerned. Maybe they have not basically heard what they wanted to hear, and for that reason, it's down 14%, basically for almost 15% today. So yeah, it's a shame. It's a shame that basically these things do happen. But again, for us as investors, long-term investors, this is really good. So what am I doing? I like the company. I'm not gonna buy it right now. I'm hoping that it will come back down to at least 450-ish. Okay, if it comes back to around that price, that is my price. That's my basically price target, 450s. Okay, and it can happen. Just today, it basically lost quite a bit. So these things can happen, especially if we see correction in the semis, a correction in the technology side of things in the next few months, which I genuinely think it is possible. This market is very dangerous. Basically, sentiment can easily shift from where we are to almost we hate technology. So it can happen. These things can easily happen. We've seen in 2022. So for that reason, what I've done today, well, what I'm going to do is I'm going to add Adobe to my watch list and leave it there for now and then see what happens. Now, what did I sell today? I've sold 3 shares of ASML. And the reason I sold it is because I wanted to take some profit off the table. It was up quite a bit. I think it was about over £700 profit from selling these 3. There you go, £721 basically for profit off the table today. And the reason I did that is not because I hate the company, because it's gone up so much. It was now over 6% of my overall portfolio. Did the same thing, remember, did the same thing with Broadcom not long ago, and at the time it was up about 100 and something. It's still up 160 something. Okay, if it comes back down again, I will buy more of it. But right now, I just feel like to kind of balance the portfolio, I just need to take some profit off the table when it comes to, especially when it comes to technologies, and of course add it to the other sectors that I need to. Now, one of the companies that I've added to the portfolio that I wanted to share with you guys today is this one here, MSC. And this company is one of the companies that I've spoken about recently. As you can see here, let me just quickly show you the earnings. There's nothing huge, okay, about 10% each expected every single year. Same goes for the revenue side of things. And ratings right now, Wall Street is actually saying about 11% upside from where we are now. And as you can see, there are 4 strong buys, 4 buys, 4 holds, 3 sells, and 1 strong sell. So in terms of dividend side of things, as you can see, is 1.17. So it's not, I'm not buying for the dividends. Okay, very similar. Like I've said, I've done a video before, so I'm not going to go over the entire thing, but they're quite small payout ratio. They're growing that dividend every single year. They've been doing that for basically 9 years now, and $6.40 is what you get for every share of this company that you own, according to the dividend yield theory. Basically, it looks like it's actually undervalued at the moment. And then even for the PE, the 5-year average PE for this company is 40. Right now it's 37. So for that reason, I want to basically initiate a new position. It's not a full position yet, so I would like to own more of this company. Right now is 0.5. So I've made some sales like I showed you earlier. So there's £2,308 in the account right now. So I'm going to buy 4.5 shares of this company. Bismillah, I wish I had that much money. Okay, so yeah, so that's what I'm going to do now. I'm going to send this to the market, and there you have it. That's the 5 company shorts, basically five stocks, 5 shares of this company now. So what I'm going to do is, inshallah, it seems a little bit pricey at the moment. Okay, so I am taking a huge risk here, so please just be mindful of that. Just do your own research and so on. So I will dollar cost average into this company, and I'm hopeful that hopefully if we see a correction, it will come down a bit, so then I can add to more of this company. Again, that's it. That's the basically what I wanted to share with you guys today. As always, just make sure you're doing your own research by finding out whatever you need to do. Please don't just copy what I'm doing here. Again, I will continue to make mistakes, and I will continue to doing maybe good things at the same time. But again, please be mindful of all of these things. The reason I sold this company is not because I hate the company. I just wanted to take some money off the table right now, especially knowing that it's gone up almost to 7% of the entire portfolio. I'm going to try to keep the portfolio at least to 5% or more. So if it gets to 6.5%, it's okay. But once it's starting to get into that 7%, I'm going to start trimming some of these companies. Some of them I'm okay with it. For example, S&P Global, I'm absolutely fine with it. Qualcomm has actually gone up so much. Again, I might have to look at it and say, okay, maybe, you know, the fact that it's now up £1,300, I might take some of that basically off the table and buy other companies to kind of balance the portfolio. I will let you know, inshallah. Anyway, I'm going to stop the video here. Have a wonderful day. Assalamu Alaikum.